Well, good morning, everyone. Thomas Montgomery here. We get together with our distribution partners most weekday mornings at this time at 8 o'clock Central to talk strategy, share success stories, techniques. Ultimately, we're here to train and support each of you. Today is going to be a bit of a session for clarification, not really new information, but what works really well for us is as we're interfacing with our white label partners, we look for trends on questions, comments, concerns, and then we want to bring that to the group. So what we're going to accomplish today is a bit of a review, but this is meant to be interactive. So anytime you have questions or concerns or thoughts, go ahead and type it into the Q&A. I just want to cover again what we're doing for the guaranteed access to 100,000. Because I was asked this yesterday by one of our top white label partners. He's generating 10 to 20 leads a day, but he came back and wanted some clarification on it. So we're going to do that. And then a few of you aren't perfectly clear on how the collateral support program helps us fulfill the promise to get clients a minimum of 100,000. So we're going to talk about how these two interface. While they're technically two separate contractual agreements, I just want to make sure we're all on the same page. All right, so, and again, this is not new. So we've had specific training, about a 40-minute training on this from a white label partner perspective. We have about an 8-minute overview of this from a client perspective, and we've had trainings on the collateral support program. So let's hit it at a high level, and then I just need each of you to fire away the questions or concerns or lack of clarity that you have. So do you and I together go out to the marketplace and guarantee any small business owner at least $100,000? We absolutely do. What are the requirements? What should you look for before you allow someone to proceed? So what's the minimum requirements? Only two things. Their industry has to be one that's legal. We can't get funding for human trafficking. We can't get funding for fentanyl distribution. Has to be a legal industry. And that may sound silly, but that's true. And then secondly, it needs to be a US-based business. So does it matter if their business isn't formed yet? No, it doesn't matter. Does it matter if they have good credit or bad credit? No. Does it matter how long they've been in business? No. There's only those two requirements. It needs to be legal in nature, US-based. So with that, as a white label partner, when you go into your white label partner Dropbox, you will see the agreement right there, editable agreement for what we call the guaranteed financing program. You will make whatever edits you want to make to that. Obviously, you want to put your company information, your branding in it, whatever pricing you want. So that's specifically the proposition. We will work with them to raise at least 100,000 guaranteed. Well, what are we going to do? We're going to do three things. We're going to help build their financial literacy. We have an award-winning curriculum developed by the FDIC, promoted by the SBA. Do they have to do the curriculum? No, they don't have to, but it's great to have an educated client. We're going to assess and build their 3 C's, which is going to tie into the collateral support program here in a moment. And this is the same thing that you and I learned in school. But the truth is, a lot of entrepreneurs don't know what you and I know. And that's a barrier. So there's an opportunity to educate them through the curriculum or just on the fly about, well, most lenders will look at credit, capacity, and or collateral. Different sources of capital have different requirements. Not all sources look at all 3. And even within that, there's 2 types of credit, business and personal. And then the third element over here is loan packaging. So we're going to put together their business plan and financial projections and so forth, so we're able to help them get guaranteed access to capital. So with that being said, let's talk about how the collateral support program fits in. So first of all, is there a requirement that people do that clients do the collateral support program? Absolutely not. But what happens is you and I are working with clients and we're assembling their loan package and we're evaluating their credit, their capacity and collateral through these documents. In some cases, we'll see that people have either, clients have either a lack of liquidity and or what we call a collateral shortfall. And so the collateral support program addresses that. So let's pivot over and talk a little bit about the collateral support program. In addition, you'll make $5,000, just to make it real clear. You'll make right at $5,000 each time you help a client get plugged into the collateral support program. So it's not get rich quick, but it's very much worth your time. But let's set that aside. That we're not talking about your money today. We're talking about how we're helping clients become credible enough to get funding, right? Because we know the bottom line is, if we meet the underwriting guidelines of the specific lender, we get approved. And if we don't meet the underwriting guidelines, then we don't get approved. And so that's what you and I do. We help them become credible enough on paper to get approved. Okay, so the collateral support program is helping build the credibility of the client and benefits the clients in 3 specific ways. And so you need to be able to repeat back these 3 ways. If you can't repeat back the 3 benefits of the collateral support program, then I've failed, and frankly, you failed. So let's summarize it. And of course, there's more detail and we've had other training on it, but let's just at a high level be able to identify together what are the 3 benefits to the client, not to you. You make your $5,000, fine, but that's not what we're talking about. We're talking about what are the 3 benefits to the client of enrolling in the collateral support program. Benefit number 1 is we eliminate their collateral shortfall. A lot of small businesses, they want money, they need money, they desire money, but they don't have enough assets to pledge as collateral to get approved. So what do you and I do? We can provide them the collateral support program and transfer real assets, not pretend, not fuzzy, obviously not illegal. We're going to transfer real assets onto their balance sheet. And by doing so, their balance sheet is stronger and we have enough assets that can be pledged as collateral for loan approval. So benefit number 1 of why you and I might want to use the collateral support program for a client is if they have a collateral shortfall. In other words, the amount of money that they want to borrow, they don't have enough assets to pledge. You and I can solve that problem within 24 hours by transferring real assets over to their balance sheet. So that's number 1. And yes, I see the question about understanding more about the assets, and I will come back to that in a moment. But let's go through the 3 benefits to the client of the collateral support program. Number 1, transfers assets over to eliminate the collateral shortfall so they meet that criteria for getting a loan. That's number 1, right? Number 2 is it improves their liquidity. And you might say, well, how does that work? Well, most lenders look at a borrower's liquidity. Do they have enough cash or cash equivalents on hand that they are resilient, that they're not at risk of defaulting on making payments because they're cash poor? Well, a lot of small businesses that you and I work with are running on really thin cash. So, and I know the argument, well, if I had a lot of cash, I wouldn't have to borrow any money. I understand that whole argument. But in terms of liquidity, it looks not only at cash, it looks at cash equivalents. Cash equivalents are assets that typically are anticipated to be converted or can be converted into cash over the next 12 months. What's an example of that? AR, accounts receivable. What is it that you and I are doing when we enroll a client in the collateral support program? We are transferring over accounts receivables to the client's balance sheet. So we've just talked about the first benefit is we help them resolve the collateral shortfall, but concurrently, we're helping them have documented liquidity because that 100,000 or however much portfolio they want of accounts receivable counts towards their liquidity. And you might say, well, oh, so we're going to put $100,000 in their business bank account? Of course not. That's too good to be true. What we're doing is putting assets on their balance sheet that resolves the collateral shortfall that also meets the definition of documented liquidity, again, to improve their credibility on paper so they can go get funding. So we've discussed two of the three benefits of the collateral support program to the client. We add assets to resolve the collateral shortfall, and we add the right type of assets that creates documented liquidity, because those are two barriers that might have kept them from getting funding otherwise. The third primary benefit of the collateral support program to the client, again, not talking about to you. I know you make your 5,000, that's fine. Let's talk about the client. The third benefit is that we're giving them an income producing asset. Have any of you heard of Robert Kiyosaki or read the book Rich Dad, Poor Dad? Talks about the 4 quadrants. Well, what most wealthy people do is they know that they should invest in assets that spits off cash, that creates positive cash flow. So could you go out and just buy a raw piece of land? Sure, you could. And might it grow over time? Sure. But in the meantime, you've got taxes to pay. You probably got the mortgage to pay on it. It's not creating positive cash flow. Is it an asset? Yes. Could it make you money later? Sure. But in the short term, you're spending money on that asset. So let's compare that to you and I going out and buying an apartment complex. So there's an apartment complex for sale. So are they going to give you and I the apartment complex? No, they're going to sell it to us. We'd like to get a good deal, but we're going to have to buy it. Why would we buy an apartment complex for hundreds of thousands or millions of dollars? That costs money. Well, of course, but the goal is then to get renters into those apartment units, charge them rent, and then the rent that they're paying cumulatively is more than our expenses. So now we have the asset, we have free cash flow. It meets that definition of what Robert Kiyosaki teaches us. We need to buy assets that produces positive cash flow. So those are the 3 reasons why the collateral support program will help some clients. Not all clients need that. Some need positive cash flow. Some need documented liquidity. Some need collateral to resolve a collateral shortfall. So those are the 3 benefits. So you need to be able to understand that. So do you have to go out and pitch the collateral shortfall? The collateral support program to people? No, I'm not saying that at all. I just want you to understand the 3 benefits. Number 1, it adds assets to the balance sheet to resolve a collateral shortfall so we can qualify for a loan. Number 2, it adds liquidity to the balance sheet and to the balance sheet because accounts receivable counts as cash equivalent. Third, it produces positive cash flow. The bonus benefit is it also improves the client's personal financial statement, because on the personal financial statement, PFS, which is a reflection of the person, not of the business. The balance sheet is a reflection of the business. The PFS is a reflection of the individual. But if the individual owns that business, the value of that business carries over on the personal financial statement. So by adding the collateral support program, the value of the business has gone up. We've added an asset. Thus, the value of that business on the client's PFS has gone up. So now their net worth is stronger. So I guess technically there's 4 benefits, 3 with a bonus. All right, so hopefully that makes sense. If not, you've got to ask the questions, because I don't know what's not making sense to any of you, or maybe it's making sense. So our goal is not to go sell the collateral support program. Our goal is to help clients get a minimum of $100,000. And we do that by building financial literacy, making sure that they're credible enough, and building a loan package. If we find through that process, specifically building the loan package, in other words, looking at their balance sheet, looking at their personal financial statement, that they are inadequate in one or more of the 3 C's, then what are we going to do? We're going to make recommendations to fix the problem, because otherwise they're not going to get approved for a loan. We can only guarantee $100,000 if they meet the underwriting guidelines. So some people will meet it automatically. Some will need help. If they need help with any of the 3 C's, that's what you and I do. That's our secret sauce. That's what makes us different. We can help people get qualified, even if upon enrollment, they don't. All right, so the question that Timothy's asking is, okay, tell me, he wants to know more about what these assets are, and that's fine. We're very transparent. Well, for example, we bundle up typically 10 files. Now, let's step back. So debt buying and selling is a big industry. Historically, it's been done with defaulted mortgages, defaulted auto loans, and defaulted credit card debt. We're doing it with defaulted professional services. So a typical portfolio that we'll put on a client's balance sheet will be right about $100,000. It'll typically contain 10 contracts that are true, that are valid, that are collectible, but they're in default. And the buyer will pay normally 1.1% up front. So they're getting $100,000 of assets, and their initial cash outlay is $1,000. How can you beat that, right? 1% down. Can't beat it. And then they have rights and access to those assets. So we can post the assets on the balance sheet to resolve the collateral shortfall. We can post the liquidity. It helps their personal financial statement, and they can start collecting money. We'll help them liquidate that, but we'll get to that in a moment. So I think what Timothy's pressing me for, which is fine, is he wants to know more about those defaulted debts that are included in that portfolio. Well, from time to time, we have, for example, clear that out. From time to time, we have white label partners. They sign up and they don't produce. And so we train them, we support them, but they breach their agreement. Well, so we can put together a portfolio of 10 white label partners who signed up, but that didn't perform. The white label license fee, as each of you know, is $10,000. So 10 of those adds up to 100,000. So what the portfolio may include would be 10 white label partner defaulted agreements, all very enforceable. There's clearly a lack of participation, which is the breach, which triggers the need for the white label partner to pay the $10,000. It's black and white. There's no risk of loss in taking those contracts unless the individual dies. Now, if one of the initial debtors dies, then we'll of course replace out that contract. But that would be an example, Timothy. And so we've got a number of you on here, and I'll just pick names. So let's just pretend, and I know you wouldn't do it. Let's say that Alfred, Bernard, Carlos, Charles, Charletta, Collis, Jeanette, Jose, Lon, Pauline, Tony. That's more than 10 names. I lost track. But let's say that there's 10 names I just named, and they didn't help at least 8 clients in the month of September. Well, then they're in default. So then those agreements can be packaged up and sold to you, Timothy. So now they owe you $100,000. And so will they pay you? Well, they should, because they agreed to pay. If they don't pay Timothy, then we help Timothy liquidate it. So Timothy could send those 10 defaulted clients, debtors, to a collection agency. Collection agency can report it on their credit and collect after it. Another option that Timothy could use to collect that $100,000 from those 10 debtors would be to litigate, to take them to court, because they clearly breached their agreement. There's no doubt about that. So Timothy would be able to collect the $10,000 plus late fees plus court costs. And so Timothy has not only made his $100,000, he's literally made more than that, even though he's only put pennies on the dollar into it. The third option that Timothy, in this example, would have as a debt buyer would be to resell the debt. And that's, for example, what Alfred's doing. Alfred's getting ready to buy a $10 million portfolio from us of defaulted agreements. And his intent, I believe, is to resell it. Okay, so let's pause there. What questions do any of you have about what we're doing to be able to guarantee clients a minimum of $100,000 in terms of the three components, in terms of the 3 C's, in terms of anything on the page or not on the page? And then do any of you have questions about the collateral support program? As Timothy pressed me on. So the collateral support program is composed of defaulted professional service agreements, all collectible. Those are transferred over to the debt buyer, posted as assets on the balance sheet, which resolves the collateral shortfall, improves liquidity, and then the debt buyer is able to start collecting off of the debt from the debtors, from the portfolio, to generate positive cash flow. And that collection process we call liquidation could occur either by the people just paying, the debtors just paying as they promised they would, and or through collections, and or through litigation, and or through reselling the debt. So who has questions on how the collateral support program fits into the capital raise, the 3 components, the 3 C's? What questions, comments, concerns do any of you have? So Timothy's following it. Timothy's one of our white label partners, and he's not on track for 8 this month. He doesn't want his debt to be sold. We don't want your debt to be sold either, Timothy. We need to work with you, as well as all of our white label partners, to make sure that you're compliant. And that means that we're working together to help at least 8 clients a month. That's going to generate a lot of money for you, Timothy, and then we're remaining compliant. When we set up the white label license agreement, we said there's no upfront cost. There is a $10,000 license fee, of course, that's stated clearly in the license, but we're saying, hey, as long as you remain minimally active, you never have to pay the license fee. People used to have to pay it up front, right? Everyone used to pay it up front. Then we started to say, no, don't worry about paying it up front. Just come in, get active, remain active over a year period of time, and you'll never have to pay the license fee. It's going to be pure profit. But sometimes we'll have white label partners that sign up. They don't do what they promised to do. And so then what happens is their agreements get packaged up and people like Alfred buy them. And then Alfred, I think Alfred primarily is going to either resell it or litigate. So those are the mechanics. What other questions do any of you have? Anyone have questions regarding the process, your white label Dropbox, how the collateral support program helps clients resolve collateral shortfalls, demonstrate documented liquidity, and create positive cash flow? Who has questions, comments, concerns on today's topic? We're here to train, we're here to support. You should all have your white label Dropbox. If you don't, let us know, and you know our email, support@businessparalegalcorp.com. Got our text line or phone line. I wouldn't call in, that's really meant for clients. But if you have questions, email us or text us. We'll help you. We want to be successful. There's so many small businesses that want to need capital. There's no reason that any of us are not able to help 8 clients a month. All right, we had a couple questions and we'll wrap it up. Jeanette asked on the collateral program. So in the collateral program, normally this is an organic need. So we don't just go out and sell it. Jeanette, you'd enroll clients. We're putting together their loan package. We're evaluating their 3 C's. And if they have an issue that's a barrier to funding, then you and I will visit about it and resolve it. But essentially, the $100,000 portfolio is normally sold to the client at 10 cents on the dollar. You, as a white label partner, would pay 5%, 5,000. And so the difference between 10 and 5 is your profit, 5,000. But yes, referral partners can sell the collateral support program as well and make the same 5,000. You don't have to be a white label partner to sell the collateral support program. Okay, thank you for that, Jeanette. Let's see, Jose has a question. In the credit arena, so we're helping, help clients build out their business credit profile. And if they have personal credit issues, we need to look to see what's going on. Do they need us to add new trade lines to strengthen their profile? Do they have too many inquiries? So we need to remove inquiries. Do they have too high of utilization? We need to reduce their revolving utilization. Do they have charge-offs, collections, what have you? But I think Jose's question is about the 60-day credit sweep. So the credit sweep is a permanent block. It's not a temporary, it's a permanent block. But again, and I appreciate those questions. What you and I do is very effective. It's legal, it's ethical, it's very profitable for you, as we can help any small business access at least 100,000. And we accomplish that by hopefully improving their financial literacy. It's available to them. It's up to them if they engage, I guess. We make sure that they're credible on paper, and we get a loan package built. And by doing that, we'll meet the underwriting guidelines, and they'll get funded. We guarantee it. We guarantee it. We guarantee it. As a white label partner, you're typically making $2,500 upfront per client, plus 10% to 20%, whatever you want the performance fee to be. So you're at about $12,500 there. And then if the collateral support program is needed, then you can make an extra $5,000. If credit sweep is needed, which may or may not be, you can make another $1,000. So again, it's not about getting the client to pay more, but the more help they need in becoming more credible. It's like you take your car to the shop. The more work that it needs done on it, the more the mechanic is going to charge. That's just the way it is. All right. Well, thanks, everyone. Let us know if you have any questions. We'll see you back Monday morning. Have a good day. Bye-bye.